In this video, we'll be taking a look at a few chart analyses to get you prepared for the week ahead. If you love the content, please like, subscribe, and leave your thoughts in the comment section down below. And if you're interested in learning trade forex like a professional, we currently have a promo going on. Check out our complete forex trading course on Udemy. It's going to change your trading game forever. Okay, I have the link also attached in the description below. So we'll be taking a look at 5 different charts. So gold, crude oil, USD-CHF, and Nasdaq. So if you want to go straight to any of these charts, you could use the timestamp below, right? Without further ado, we'll be starting with the gold charts on the 2 hours time frame. So I'm going to try as much as possible not to take much of your time. And we've been in this massive bullish move for the past 2 months to be precise, right? And now we seem to be in a massive consolidation, which looks like a bullish flag, right? So I think there's a good chance we consolidate within this price levels and oscillation before probably seeing the bullish breakout, right? So this is my best case scenario if I'm to take a guess at as to the price action we should be expecting from gold, right? But meanwhile, we're going to trade the market wherever it leads, so without any of these assumptions, right? So looking at this chart pattern, which is a bullish flag, right, we are going to take a look at the 2 best case scenario, right? So the bullish case scenario as well as the bearish case scenario. So I'm going to take a look at the bearish case scenario first. So since this is, a bullish flag in anticipation, right, because it's only confirmed when we get a bullish breakout, there's a good chance we come closer to these lows before oscillating to the upside and getting that bullish breakout. So for us to go short, I drew a trend line here. I'm simply going to wait for price to take out this trend line and give us this movement to the downside. So I'm going to put in a small area of value over here because this is our previous resistance level, right, which is probably going to turn into a support level over here. So if we get something like this and a good breakout, this is going to be my signal to go short. And when I go short, stop loss is going to be above the consolidation that leads to the breakout, or above the consolidation after the breakout from this trend line, right, but before the breakout from this mini area of value over here. Then my take profit is going to be around these lows, right? Because it's not logical to expect price to touch the bottom of this channel, even if it does. To be on the safer side, you simply just take profit before whatever price action is going to happen over here manifests itself, right? So with that being said, for a bullish case scenario similar to what we'll be watching of a bearish case scenario, but this time we will be waiting for more consolidation, a better consolidation, followed by a bullish breakout. So if we do get a bullish breakout, taking out this trend line, right? Because you can see we have multiple touches over here. So I'm going to adjust this a little. So if you take a look at this trend line, we have 1, 2, 3, 4. So we have 4 touches. So the moment we get a good consolidation, followed by a bullish breakout, that will be our confirmation to go long. So entry is going to be around these price levels. Stop loss is going to be below the consolidation lead to the breakout, and first target is going to be around these highs, which is obviously very close to the entry. Next target is going to be around our all-time high. So this range over here is our all-time highs when you go to the daily time frame. So I'm going to quickly go to the daily time frame so you see what I'm talking about. So this is the daily time frame, and you can see this our massive resistance level, right? So we have 1, 2, 3. So basically a triple touch that led to this massive bearish movement to the downside. So right now I'm simply going to wait for the completion of this formation, followed by a bullish breakout aiming for the all-time highs. So this I'm going to trade gold. Meanwhile, everything I just explained right now would be washed on the 1 hour time frame. So I won't be taking that trade on the daily on the 2 hours time frame. So I'm going to wait for the 1 hour time frame to complete those formations before I either go short or go long. So this is my bullish and bearish case scenario for gold. If you have other opinions, please leave your thoughts in our Discord community. It's totally free. I have the link attached in the description below. So moving on, next we'll be talking about crude oil. So crude oil, nothing much to see here other than the fact that we just grabbed liquidity from underneath this area of value. So this acted as a major support before, resistance, support, and now grabbing liquidity from underneath these price levels. But that's not what we're going to be basing our trade on. But what's most important over here is that we have what we call a bullish divergence. This is a process whereby we have price creating lower lows, but the RSI, which is a momentum indicator, creating higher lows. And this is very significant because even the higher lows on the RSI seems extremely oversold, right? So we have one here oversold. You can see the green shade, the red shade over here, and next leg also oversold, but it's a higher highs, right? Sorry, it's a higher lows, excuse me. But over here on the price, we have lower lows, grabbing liquidity from underneath place. So I think there's a good chance we see price rising to the upside on crude oil. But this is what I'll be watching out for. So for our confirmation to go long, now to see if this bullish divergence is going to take us way higher all the way to these highs, or probably these highs, or these highs. I'm going to wait for price to break through this green trend line first. So that will be watching out for price action like this, a consolidation around here, right, followed by a good breakout. This would be the best possible way to get into this trade. So when we take out this trend line following a consolidation like this, stop loss is going to be underneath the consolidation. First target obviously is going to be around this highs, which is pretty close to your entry. Next target is going to be around this highs. Your next target is highs, and your next target is high. So it depends on you. You could get all your position out of the market when we get to these highs, but it's good to scale out from your positions gradually so you can get the most out of the market, right? So this is what I'll be watching out for to go long on crude oil. I wouldn't be going short right now until we start trading below these lows, right? So when we start trading below these lows, that's going to be when I look forward to consider going short. Meanwhile, this bullish divergence is very, very active right now, but we're just going to wait for this consolidation, which will act as a sign of a bullish continuation after this massive bullish move. So this will be our confirmation to get in on this trade, taking advantage of this bullish divergence you can see on crude oil, right? So this is it briefly for crude oil. The reason why I'm going to be waiting for this consolidation is this: if we get a pop to the upside, taking out this trend line, I wouldn't just jump into a trade, right? I won't just jump to a trade over here. That means my stop loss would have to be underneath this low. This is going to be the logical price level to set your stop loss, which will eventually be too wide, right? So that's why we watch out for consolidations, right? Market gets a breather and then we get a breakout. So this would give you a better risk to reward ratio and a better confirmation to your trades, because then you get your entry at the breakout after the consolidation. The stop loss could easily be below the consolidation, because when we trade below that consolidation, it means the setup is then invalidated, right? So if you get a consolidation like this, it helps you manage your risk properly, gives you a better risk to reward ratio, and enjoy tons of profits compared to the risk you are taking for that trade. So this is briefly for crude oil. Moving on, we're talking about USD-CHF. I rarely trade currency pairs. I don't think I'll be trading this, but this looks like a decent chart. That's why I'm going to be talking about this, right? So we can see we had an area of value over here. This is clearly a downtrend, price creating lower highs and lower lows. So we came into this area of value, which can easily be adjusted all the way to these highs if you want to, right? Because this is clearly a reversal from the area of value. So we got price tapping into the area of value and then reversing to the downside. So we took out this trend line, had a good retest, and a small consolidation as a continuation of the bearish movement. So you could equally take these lows, which in this case, around this price level would have been a very good price to go short, right, after this consolidation. So right now we seem to be trading below these lows, and we had a consolidation acting as a retest followed by a press to the downside. So right now, if you want to go aggressive on this trade, I think when the market opens, I strongly believe it's safe to go short, okay? But your stop loss would have to be above these highs, right? So stop loss would have to be above these highs, which is a safe zone to take those trades, and you could go short. Meanwhile, take profit would be all the way around these lows, right? First take profits, then you can second take profit here, third take profits, right? So this is how I'm going to trade USD-CHF if I was going to take this trade. But I'm going to focus on gold and crude oil and then Nasdaq personally. So I won't be trading USD-CHF. But I feel it's a very decent chart, and so many traders trading currencies could take advantage of this price action. So that's the reason why I'm doing this. Meanwhile, when market opens, it is normal to see a small pullback to the upside, right? Before price moves to the downside. So just in case that happens, that's also something you should watch out for, considering your risk management or your risk to reward ratio. So this is it briefly for USD-CHF. I don't see any reason why you want to go long, other than the fact that this could extend downward to create a bullish divergence, but I don't think that's going to happen. So just watch this closely. If it's something you're interested in, you could take advantage of this trade and make sure to employ good risk management. Lastly, we're talking about Nasdaq, which is US 100. So this is something we'll be following for quite some time, and I think so many traders following me on YouTube must have made a ton of profit from this indices, right? So right now, all I have to do is wait for a better consolidation around this resistance level, right? And a breakout to go long. Excuse me, I'm going to do that again. So I'm going to wait for a consolidation over here and a bullish breakout to go long. This is how I'm going to trade US 100. We've been doing it like this. It's been working just fine. So why stop? So this gives us a better risk to reward ratio because stop loss is going to be underneath the consolidation, at least of the breakout, and we're just going to trail our position as we go higher. So this is clearly going to be a trend continuation. So this is a trend continuation, massive bullish move, massive consolidation in form of a bullish flag, a breakout, retest. This is classic trades, right? Then you have a follow through, move to the upside. Now we are stuck around a resistance level, meaning there's a good chance we get a consolidation followed by a bullish breakout. While for a bearish case scenario, for those who would like to go short, I don't see any reason why you want to go short here, right? But just in case you want to go short, you could do this. Very risky. I don't recommend it, but if you are eager to go short, you could do this. Wait for a consolidation. Let me get rid of this. You could do this. Wait for a consolidation, breaking a trend line like this properly, giving you a clear support level, and then a breakout. So the support level is going to look like this, right? So it's going to look like this, giving you a base, and then if we take out our support level, and you could go short. Very risky. I wouldn't recommend this because you wouldn't know when the price or the market is going to reverse. So possible price level to set your take profit would be around this range. So this would be where I would consider taking profits if I was to go short, but I wouldn't be doing that. I'm only going to look forward to the bullish case scenario, which is waiting for a consolidation over here and then a bullish breakout. So meanwhile, this is a 2-hour time frame. I'm going to watch out for this price action on a 1-hour time frame. So that's it briefly for this week's analysis. If you love the content, please like, subscribe, leave your thoughts in the comment section down below. And if you're interested in learning trade forex like a professional, check out forex trading course on Udemy. We have the link attached in the description below. And currently, there's a 5 to 6 days sales going on, so you get it course at a very discounted price. So that's it from me, guys. See you next week.